Hi, this is Ryan. I wanted to go quickly through the S&P 500 chart and call out a few targets on the long and short side, and a few things on the daily chart I wanted to point out as well. Last week was nice. We had it's kind of a crawl up or drift up week, if you will. Once we got through this resistance level back here, back in early November, it was nice to see us get through it and kind of drift up for 4 days in a row of green candles now. Now the only thing that's kind of negative, if you want to take the bear side of this, is these 4 days have been on decreasing volume. That's not normally a good sign. You know, any kind of breakout, you want volume to be sustained, but it's not an automatic indicator of the direction. You know, you have to play what's in front of you. Price action is more important than anything. So right now the price action is good. Friday actually finished very strong, near or at the highs of the day. So that was nice to see, even though volume has been drifting slightly down. All that should do for you is give you a little bit of pause, a little bit of not concern, but something to watch for, that this isn't exactly the strongest breakout of recent highs, but it's worth noting. It's still bullish in my opinion. Obviously, you can't fight a bull trend, and on a Friday finishing near the highs of the days, you just kind of have to go with that. But can there be a pullback? Obviously so. Support at this level, at this point, a lot of people are talking about 1230. As long as it holds 1230, I am more inclined to think that if we get a pullback, it'll come back to the SMA 10, which is this white line. And here's why I think that. If you look back to late August, you see this breakout right here. It's a big green candle day. Off this consolidation pattern, we got a breakout, and you'll notice SMA 10 cross SMA 20, and did the little drift dance up. You had a couple days, you had 3 candles up, a red candle, and then 4 green candles. And this pattern of drifting up obviously stuck with us for quite some time. The key here was there was a big differential between the price and the SMA 10, and you notice that closed and closed and then finally got down and connected, and we even got to pull back to the SMA 20 before it continued up, and it used SMA 20 as support for God's next bounce. But what looks, this breakout is very similar to what we had last week or 2 weeks ago. Again, SMA 10 below SMA 20. We had a 3 candle move up. Here we are up to recently. SMA 10 below SMA 20, 3 candle day up, followed by a red candle, followed by a SMA 10 SMA 20 cross, SMA 10 SMA 20 cross, and 4 candles, large separation between SMA current price and SMA 10. That's what we're seeing right now. So very similar pattern to what we had here. Good news, if you want to take this hypothesis that we're going to take the same kind of pattern trending, is that we're going to be in a slow and steady drift up. I don't know if I buy that, but that's where we are right now. And as you noticed again, this move took us off of this Fibonacci retracement. This is a weekly fib line from the weekly chart, and took us all the way to the next fib line on this drift up. And that's what we could be having here. We got off this fib line. We could be drifting up to this fib line here. If you can see that, it's about 1275 will be the next fib line target on the S&P weekly chart. So I will get into the weekly chart in the next video, but again, it looks okay. I wouldn't say this is a strong bull move, but you can't fight the ticker, can't fight the price, and it still says up. Pullbacks are obviously to recent highs, which is at 1225, or a bad pullback would be to this fib line down around the 1175, 1180 range. So we'll watch for that, and 1275 to the high upside.